Aileen Fernandez, thank you so much for joining us. This is a collaborative event, a webinar between North and South Florida. We also have someone from ODR&R that is here from the field that she will be also sharing some insight with us. I'm joined by three of my colleagues. Janelle Hine from North Florida. Janelle, do you want to go ahead and introduce yourself? She's our district director from North Florida.
Well, I think you just introduced me, but yeah, hello, thank you for coming. Appreciate you all taking time out of your busy day so that we can kind of provide you some information, some overall general information about the disaster loans that are available due to the Florida hurricanes that we've been blessed with. So thank you, and I'm going to turn it back over, I guess, to CJ, right?
Yep.
Okay, well, thank you, everyone. Thank you for joining us. And we'll get, let's go to, my name is CJ Castro. I'm the Senior Area Manager for the Tampa area and 9 surrounding counties. And it's a pleasure being here and trying to inform everyone. And I'm going to admit everyone here there. There we go. For disaster loans that are available for individuals and households and business owners, and also for nonprofits in our area. Next slide, please.
We got to introduce Julie.
Oh, yeah. Sorry, Julie. Oh, there's Julie. Oh, Julie Garrett. I'm sorry, Julie.
Yes.
CJ, you weren't on the last one. Julie's going to do the first couple of slides, so.
Okay, gotcha. Julie?
Julie, you have to unmute yourself again.
I'm sorry. Yeah, hi, everybody. I'm Julie Garrett. I'm a public affairs specialist with the Office of Disaster Recovery and Resilience. I'm from the Atlanta office, but I'm here in Florida, going to lots of meetings and talking to lots of people. So I'm happy to be here today. Thank you. Do you want me to start or do you want to start, Janelle?
No, you can start.
Okay. So yeah, like Janelle said, you've been blessed with a lot of hurricanes lately. So Hurricane Helene, this list of counties are the declared counties. If you live in these counties, the disaster loan program we're talking about is open to you. You have to be in these counties to be eligible. So we have two types of counties. We have primary and contiguous counties. The primary counties are usually where the damage is the worst. The contiguous are the ones that touch those counties that aren't already primary. So here in Florida, I'm going to read this off. I'm sorry, it's a long list, but in case you're in the car and joining by phone, we want you to know what those are. It's Alachua, Baker, Bradford, Charlotte, Citrus, Collier, Columbia, DeSoto, Dixie, Duval, Franklin, Gilchrist, Gulf, Hamilton, Hernando, Hillsborough, Jefferson, Lafayette, Lee, Leon, Levy, Madison, Manatee, Pasco, Pinellas, Putnam, Sarasota, Suwannee, Taylor, Union, and Wakulla. So in those counties, there are going to be physical disaster loans and economic injury disaster loans available for small businesses. Now, in the contiguous counties, the ones that touch those counties that aren't already primary, there are just going to be economic injury disaster loans. So that's going to be Bay, Broward, Calhoun, Clay, Flagler, Gadsden, Glades, Hardy, Hendry, Highlands, Liberty, Marion, Miami-Dade, Monroe, Nassau, Polk, St. John, Sumter, and Volusia. And also some Georgia counties, if you have friends up there, in Brooks, Charlton, Clinch, Eccles, Grady, Lowndes, Thomas, and Ware. We're going to show you how to apply coming up. But anyway, those are the counties where you can get help if you were affected by Hurricane Helene. And in Milton, it's the same deal. The primary counties for Milton are Brevard, Charlotte, Citrus, Clay, Collier, DeSoto, Duval, Flagler, Glades, Hardy, Hendry, Hernando, Highlands, Hillsborough, Indian River, Lake, Lee, Manatee, Marion, Martin, Okeechobee, Orange, Osceola, Palm Beach, Pasco, Pinellas, Polk, Putnam, Sarasota, Seminole, St. John's, St. Lucie, Sumter, Volusia, and the Miccosukee tribe of Indians of Florida. That is for physical disaster loans and economic injury. And then those counties that touch them, the contiguous counties where it's just idles, economic injury disaster loans, that's going to be Alachua, Baker, Bradford, Broward, Levy, Miami-Dade, Monroe, and Nassau. A common question we're getting out in the field is, what if I was hit by both hurricanes? What do I do then? You can apply for the one that was the worst for you, or if you want, you can even put in 2 disaster loans, one for each one. Just know that disaster loans, the payments stack. We can't combine them. So that is something for you to think about. You know, how many loan payments do you want to have? But you can apply for as many disasters as affect you. And if you have a COVID idle, you can still apply for a disaster loan for the hurricanes. That's another frequent question. Okay. So the physical damage loans, if you're a business of any size, you can borrow up to $2 million for your uncompensated losses. Homeowners can borrow up to 500,000, and renters and homeowners can borrow up to 100,000 for their personal property loss. And that includes a vehicle. If you have a disaster damaged vehicle, if your car got flooded or a tree fell on it, you can apply for a physical damage disaster loan to replace or repair that. Now, a common misperception people have is that you can just come up with the figure that you want from SBA and get that great interest rate. It doesn't work like that. SBA will look at your damage, look at your economic loss, and then they will offer you an amount for your loan to help you get through that recovery period, either to make the repairs or to keep your business in operation until things improve. So it isn't just up to you what to apply for. We kind of offer you an amount, and then you can decide if you want to accept that or accept a partial amount. So the loan terms are up to 30 years, and they're based on your ability to repay. The low fixed rate of interest, and by the way, that never changes. These loans are direct from the federal treasury. It's 4% for businesses, or actually I should say as low as 4% for businesses, 3.25% for nonprofit organizations, and 2.813% for homeowners and renters. Now, a really great feature of disaster loans right now, all disaster loans, every declaration around the country, I'm sorry, let me turn this off, is there are no payments and no interest for the first 12 months after your funds are dispersed. So once that money's in your account, that 12 months starts and there are no payments required. However, if you want to make payments, you can. And by the way, if you want to pay your loan off early, you can do that as well. There are no prepayment penalties with these loans. Now, the deadline for Helene is next week. It's November 27th. And for Milton, it's December 10th. And these are for the physical loans. We fully expect these deadlines to get extended. They just haven't announced it yet. But saying that, we can't be 100% sure. I don't want to encourage you not to apply. So if you're interested in these, please get your application in soon. It's not that hard to start the application. That part's pretty quick. As we process your application, we'll be asking you for more information. So you just need to get that application in. Right now, the deadline is November 27th for Helene and December 10th for Milton. And by the way, another common question is whether we help people who are renting their space for their business. The physical disaster loans cover leasehold improvements. They cover your fixtures, your furniture, your inventory, tools, that kind of thing. So anything physical, yes, you can apply for that for a physical disaster loan.
Julie, you want to talk about the mitigation, which is the last part?
Yeah, I can talk about that. Do we have a slide just for mitigation? I'm sorry.
We don't. It's at the end of
Okay.
this one.
Okay, okay. So another really good feature for disaster loans is that you can add 20% of your verified loss to your loan for mitigation projects so that you can build back stronger. And that is for any kind of disaster, not just for a hurricane. You could put in a safe room, you could raise your mechanicals, you could put down better tie downs on your property, like whatever you think is going to help you. You could excavate around it, whatever you think is going to help you to make your place of business or your home safer. So that's a really good benefit. And it's based on your verified loss, not your loan amount, how much your loss is. So let's say your insurance, pretty much gave you almost everything you need to recover. we're not going to look at that little difference there between, your physical loan. It's going to be your loss. So for instance, if you had $100,000 worth of damage and you still got 98,000 from your insurance company, so you just needed a small physical loan, we're going to look at your damage. So 20% of 100,000 would be 20,000 available to you for mitigation. So you can really use that mitigation money. You have 2 years to add that to your loan. 2 years to figure out what would be the best project, what you want to do. And I guess we can talk about this later, but another thing we're getting out in the field a lot is the 50% rule and rebuilding along the coast where flooding was really severe. I'm not sure how many businesses are in that, having that happen, but you can also use the disaster loan to help you with those expenses when you have to build back to much higher standards through that because of that 50% rule. Okay, now.
CJ, did you want to add anything to the slide?
No, I think you covered it very well. Thank you. Outstanding
Okay,
job.
thank you. Okay, next one. So economic injury. I think the country's pretty familiar with this because of COVID EIDLs, but basically EIDLs in a regular disaster setting, they are available to small businesses that don't have credit available elsewhere, who need funding, who need working capital to help them meet their necessary and normal monthly operating expenses. So by that, we mean like your rent, your utility, your payroll, just like your normal business expenses. We say that this is the keep the business in business loan. We want to help you stay in business. And we know here in Florida that the disasters could really be impacting tourism where you are, especially if you're along the coast. So you don't have to have you don't have to have physical damage to apply for an economic injury disaster loan. Just being someplace where, there's an overall, downturn in the economy due to the disaster, and you can trace that downturn to your current loss would make it possible for you to apply for this loan. So again, this is up to 30 years. It's based on your ability to repay, and the interest rate for businesses is 4% for and it's 3.25% for private nonprofits. Now you might think, well, why would a nonprofit need this? They're not in business. Well, let's say a nonprofit had a really big golf event or a really big fundraiser event that funds them for the whole year, but they had to cancel their event because of the hurricanes. Their community was without power. It was chaos. They can't hold an event. So not having that event is going to really impact their operating funds. So that's why they can apply for an EIDL. So if you know anyone in that situation, make sure you tell them about this. It's a great opportunity. So again, no monthly payments or interest for the first year, and you get 9 months from the date of the declared disaster to figure out your finances and see if you're going to need this. A lot of times a mom or a pop business, a small business, they'll kind of like hang in there. They don't want to get a loan. They're going to try to come back up with that money. And as those months tick by, they realize like, wow, we're really going through our savings. We're in trouble. We need that EIDL. And that's why they give you this nice 9-month window to apply. So for Helene, the deadline for that is not until June 30th of next year. And for Milton, it's July 11th of next year. Again, the maximum loan amount is $2 million. And that would be if you didn't get anything but the EIDL, but if you got an EIDL and a physical disaster loan together, those two loans can't be more than $2 million unless you're a major employer. I think that covers it. Yeah. Okay, next.
CJ, you want to add anything? I'll just add something real quick. So
Okay.
You got to think about different things that can impact your business. It doesn't have to be necessarily like we don't look at the lost revenues, although that's an obvious impact to having the storm. But what if there's problems with your supply chain because your vendors go out of
Yes.
business or can't like be operating right now? Maybe it's your customers aren't coming because they're also suffering from physical damage and they have to work on their homes or something like that. Maybe it's your employees that don't want to live in Florida anymore. And I get that after the last few years that we've had. That can also impact your business. But again, to Julie's point, it is to help you to meet your needs, your working capital needs. It's not necessarily to replace the lost profits. So that's the thing that we have to, and it doesn't fund expansion. So it is something that you are certifying that it's an impact because of these storms. And as Julie said, as long as you don't tap out over the 2 million, you can apply for any of the storms that have affected your business or your nonprofit. So.
Yeah. And something I want to say too, as people are joining, because I see we're up to 75 people, that's awesome. Everything we're talking about here applies to all the disaster declarations up the East Coast right now. So if you have friends or family that are in those other states going through this, they have to get their state's exact information, but the program is the same nationwide. This is the disaster loan program everywhere, just so you know. Okay, so requirements for loan approvals. You have to be in the declared area, so those counties you mentioned in the beginning. You have to have a credit history acceptable to you, to SBA. You have to show that you have the ability to repay the loans. People always ask, what does my credit score have to be? We don't give that information out. I don't even know what it is. I just know that it is easier to get a loan from SBA. It's easier to get a disaster loan than it is to walk into a commercial bank or a credit union and get a loan. So just don't turn yourself down. We want you to apply. Just put your application in. Let's see how it goes. Don't, turn yourself down. Apply. So collateral requirements, there is no collateral required for loans of 50,000 or less. No collateral for 50,000 or less. So you can get potentially a $50,000 physical disaster loan if you're a business and perhaps a $50,000 idle disaster loan. So those two together are up to $100,000 without collateral required.
Good afternoon. I'm sorry. What about if you own a home?
Yes, if you own a home, you can apply for up to $50,000 without collateral. And if you weren't here in the beginning of the slide, you can apply for up to $500,000 for your uncompensated losses, whatever insurance and FEMA haven't given you money for, and up to $100,000 for the contents of your home, your personal property, your vehicle.
Okay, I'm sorry. I tried to join at 2 o'clock, but I was having a bad reception. So
It's okay.
the loan, if I have a house and there's some good damage to the house, no vehicle were damaged. My question is, the money that I borrowed, you mentioned that it was 50,000. Can I use that to pay bills, not just fix my house?
No, unfortunately, the disaster loan is for your property repair. It's not for you to just pay your bills. If you were a business owner and you got an economic injury disaster loan, that loan could help you meet your bills, but we don't have that for homeowners and renters.
So the 50,000 that you give to homeowners, you guys double check that it's just to repair the house.
By the way, just so you know, that 50,000 is just the uncollateralized loan. Like you can apply for more than that, but as far as us checking, you are going to sign documents telling you exactly what you can do with the money. And if you were to do something else with it, it would be considered fraud. And they do go back and check people randomly to make sure that they're following the guidelines that they were given. So I don't recommend doing anything except what SBA tells you to do with that money. That would not work out well for you if they found out.
No,
Yeah,
I'm
I
not
believe
doing asking. So you cannot use that personal loan to pay off your debt with credit cards, nothing like that. It's strictly with the house.
Okay, if you put disaster repairs on your credit cards, if you started to go to Home Depot and Lowe's and put stuff like that on your credit cards, things that are helping you recover and rebuild, you could pay that off with the disaster loan.
Got it.
Okay,
Thank you so much, lady. God
sure.
bless you.
Okay. Oh, here's a question. Can you better define a verified loss? All that means is we are going to send a loss verifier to check your damage. And so we'll have a list of like what was damaged, what we think it's going to take to repair. And that is going to be the amount they're going to use for your loan offer and for your mitigation amount that you can apply for. So by verified loss, we mean we verify it. Okay. Do you want to take this, Janelle, or?
Is there I can't see the questions when I'm presenting.
I just meant, do you want to keep going with these slides? Do you want to take turns?
I know CJ can take this from now. So
Okay. Now that I found my my microphone and I gotta mute myself, I was talking for about 5 minutes. Okay, this is what you need for documentation when you're applying for a disaster loan. You need a good, reliable cell phone number that the SBA can contact you and you can answer phone calls, because this is a process. It's just not an application. It is a process that most likely they're going to request for more information, either by email or by contacting you directly. So when you fill out the application, make sure that you put down a number that is that's available to you at all times, and it's easy for you to answer possible questions. You're also going to need proof of residence that indicates that you do live, or your property is in that disaster loan. Most likely they're gonna ask you for a copy of your license. You're also going to need a social security number, employer ID, possibly if you're applying for a business loan. If you are not a U.S. citizen, they may request for a copy of your permanent residence card, or affectionately called the green card. Also, you're going to need financial information. When you're filling out the application itself, take out your latest filed federal tax return and make sure that the name on that federal tax return, that you're either filing your application under that name or under your personal name. And when you fill out the 45 the tax information, you're basically putting down the exact same spelling with the punctuations and commas and dashes that your either CPA or your accountant has filed your taxes under. It makes your life a lot easier if you basically transcribe that information directly into your application. You're going to need a copy of your federal tax return, again, for verification that you're putting in the right information. And on top of that, you're also going to need as much information that you can possibly put together for your insurance information, which may include policy numbers, agent information, their telephone number, maybe an address for them. I always tell folks it's a great idea, especially during a disaster, and I've been through about 8 of them. Create a digital file with all that information and renew it every quarter. But if you have all that information, including your insurance information, it's easy to bring it up, drag and drop that information into your application process or application portal. Next slide, please.
And CJ, just can you talk to them about the fact that they don't necessarily have to have been going through the process of doing an insurance claim before they apply?
Gotcha. Yeah, and if you haven't applied for your insurance, or you haven't heard from your insurance company on your claim, please don't wait for that, because we encourage everyone, even though there's a lapse of funding right now, and we're still waiting for Congress to approve the funds. Don't wait until it's too late, or until they decide not to go past the deadline that they have officially notated on the fact sheets. Continue applying. Apply even if you haven't heard anything from your insurance company. Apply even if you don't even plan to file a claim with the insurance company, because one thing or another. So it is important for you to apply quickly. Apply as quickly as you can, because the longer you wait, the longer you're going to have the list is going to be in front of you before you get approved, basically.
Julie, you wanted to add something?
I just wanted to add that disaster loans cover insurance deductibles. So that's really important here in Florida, because people tend to have very large deductibles.
Yes, we are
Thank
blessed
you.
in many ways here in Florida.
Yes, we are. And if you're, by the way, one thing, keep in mind that if you're not in a flood zone and you do take these loans, they may designate that you have to continue to carry flood insurance. So that's one thing that you have to remember, unfortunately. But Uh, unfortunately,
Can you repeat that last part? I'm sorry. If
if you
you're
if you were impacted by floodwaters, you may be mandated to take to carry life flood insurance.
oh, that's not good.
It's
Okay.
actually true about anybody. If you apply because you were underinsured, maybe you didn't have any insurance. If you accept the loan, part of our requirement is that you have to have insurance because we want it to make we want to make sure that when we extend you the assistance, you'll be better. You'll be in a better position the next go around. So if you have insurance in place, there's a chance that you won't have to access as much of the funding. So if you were underinsured or not insured at all, when you accept the loan application, part of the requirement is that you get insurance. And CJ is saying if you didn't have flood insurance, you may have to get flood insurance. So
Yeah, basically
Yeah,
what the
my case is I have insurance, but I don't have it's not required for flood insurance in my area, and I have flood water.
right.
So
yeah
I didn't even file a claim because I already knew it was flood water, and I didn't want it on my ISO on my claims report. So that's why I was like, well, it doesn't make sense for me to even report it because I just don't want that hit.
yeah, and
But
that's
if I have
yeah.
to get, go ahead. I'm sorry.
Yeah, and that's normal. Um, if it basically for the federal government to tell you that you may need flood insurance, it's just basically to mitigate future costs or future claims later, not claims, but future losses in the if you got hit with another disaster.
My concern with that, and I'm gonna just leave it on this, is how much is that going to be and what the premium would have to be, because that
Well,
can impact my,
Excellent
my
question. Yeah.
yeah,
yeah.
that's a great question. I know I'm not a disaster loan, and for me, I live in Tampa, and for me, it was $364 for the year. So it's a personal decision. You have to just get informed on how much it's going to cost you.
And I think this is a good point, Julie and CJ, to let them know. Like, I think Julie, you said we will offer them an amount. They don't have to take a loan.
Right.
Right.
There's no harm, no foul if you decide
Mhm.
that you do not want to go down this road after you read all the loan conditions and realize what you're going to be required to do. So you can always, at the end of the day, say, no, I don't want to do this. You're not locked
Mhm.
in just because we offer you some assistance.
And
Yeah,
and
and
one more thing is there's no prepayment penalties on top of this, so you could pay it back anytime you want to. As well as, just like Janelle said, at the end of the day, after you do your homework and figure out how much it's going to cost you, and you don't think it's the right move for you, you can just basically say, just basically walk away from the table.
yeah, another thing is you can apply, it's free to apply, and you have 3 weeks to read through the documentation before you decide whether you want to accept. You can accept a partial amount. A lot of people want to keep it under 50,000 because they don't want a note on their house. And then let's say you turn it down, like you just think, I don't really need this right now, or I'm still waiting on my insurance. And from the date of that determination letter, you have 6 months to change your mind. So if you turn it down and then later on you think, oh, I should have gotten that, you can just turn it back on. That's a really good feature of disaster loans. I've met so many people out in the field, post deadline who wish they had applied. Like, just do it. It's just, something you can do. It's a recovery tool. It's there if you need it. And if you're a homeowner or a renter and we turn you down, we refer you back to FEMA for potential additional grant consideration. And also, the state will get information from SBA on who couldn't afford a disaster loan, and they'll reach out if grant money becomes available. So it's just a good thing all around to apply. I really encourage you to just put an application in. Yeah.
Does
I
that
CJ, you
I,
flood
want
I
to?
could I
damage
could
component apply if your loss was, or sorry, that flood insurance component, does that apply if your loss was wind related?
What's your question? I'm sorry, I don't understand.
Sorry,
She's
I
saying
kind of
if
skipped
the
back
loss
to,
is related to wind and not flood, would she still be required to put flood insurance if her house is in a flood zone?
You only have to put flood insurance if your house is in a flood zone. If it's not in a flood zone, you don't need to put flood insurance on your loan. But everybody who gets a loan must put hazard insurance on their property. So you have to have homeowners, or you have to have insurance moving forward, because if there's a loss, they're trying to protect taxpayer money so that, it doesn't happen again later on. They're very firm on that, both FEMA and SBA. If you don't keep your insurance and then you have another disaster in the future, you won't get anything from either of them. So that's a hard and fast rule.
Okay, thank you.
Okay.
CJ, you want to talk about this slide before we do
Sure.
the
Yeah.
website?
Sure. How to apply? It's really easy. And you can go to this hot link right here under lending.sba.gov. It'll come up to my SBA loan portal. You put in your information. You come up to the, I'm not sure, I guess I could see it. The disaster assistance loans. You click on that blue rectangle, and it will come up with the next page where it says disaster declaration search. You basically do the drop down, pull up the for Florida or Georgia, wherever you're located at, and then put up your county and hit continue. It'll come up. If you ever did TurboTax, it's basically the same type of format. It's all menu driven and very easy to get through. It's going to take you about any place between 15 to 20 minutes to fill out the application on a normal application. If your taxes aren't really complicated, an average person can go through this one in about 15, 20 minutes. Next slide, please. There we go. Tips you can apply online. Make sure that you're applying, if you're applying for your business, apply under the legal name of your business and how you filed your tax returns. Avoid multiple login attempts. Make sure if you start an application, continue with the application. Multiple applications will be flagged, and it will most likely delay the processing of your intended application going forward. Password resets. Make sure that you take a photocopy or take your smartphone, put in that information. And one great key information. Sorry, my phone has been ringing. One key important thing is to jot down the 800-659-2955. That's the disaster customer service phone number. I have always put that in every single phone that I have. Again, that number is 800-659-2955. It's great. You want to have that number as part of your speed dial. If you have multiple owners, when you're filing an application for a business, make sure that you have all the joint information from all the multiple owners when you're putting the information in there. You don't want to, if you have 3 owners, you don't want to have 3 different applications for the same business. You want to have one application with all the business owners listed there. Notification.
Wait, guys. Wait. On that, CJ, all the business owners that are 20% or more business owners, they have to have a portal, though. They have to
Yes,
have a
I'm sorry.
portal.
Yep.
So
Yep.
yeah, just
Right.
explain that maybe.
Yeah, if you're filing it based upon your own information, you can basically have to log into my SBA portal and create your own portal and put in your information on there as well. Okay, and if you also got a damage on your personal property, you want your own application based upon your own personal assets or personal information on top of that.
I have a
What I said,
question.
yes.
Okay, so if I just recently moved here, I'm a resident in the one of the designated areas, and I have a business that I'm actually migrating. I mean, I moved here in July of this year. The business is still technically under Texas, but I have a foreign corporation with the same company. Am I able to still apply for that? Because I mean, I still have some issues.
in short, I would apply. Most likely, they're gonna ask more information on when did the business move into the area, and have you provide more information on that.
Okay, yeah, I've been doing business in the area since I lived in Texas, but I'm here as a resident now, and I still have business here. So
Yeah,
I don't know if that it affects me.
yeah, they may ask you for a copy of the license, and that kind of illustrates where you are a legal resident in,
Got you.
and where. Yeah, so look at that. I know that question comes up a lot since we're in Florida. A lot of folks have second homes. Second homes are not eligible under this program. Only primary homes. And if you're trying to get a secondary home covered under this program, you're not going to be very successful under that. Um, just keep that in mind. And also, one thing that I learned a long time ago was if you have a boat in Florida, it's not covered under disaster. Personal property is, but your boat isn't connected, covered. Where was I? Okay, monitor your portal. I would seriously think about going into your My SBA portal on a daily basis, if not every other day. Make sure that they're not waiting for information on there. When I was a loan processor, if we attempted to reach someone 3 times and we failed to reach that person for more information, we kind of withdrew the application. So you don't be alarmed. If you see withdrawn, it's because they're either missing information, that they didn't get a response from you. Immediately reach out to them, send out an email, go to your portal, see what's going on, send out, call up the 800 number, make sure there's some communication between you and the customer service side, and make sure go into your spam folders. Make sure that your emails from us doesn't go into your spam folder. And you're not making the communications. I always tell folks, if you're unable to check your portal, call up the 800 number, 659-2955. Every time you call the district or the customer service, they notate that you're still interested in these loans, and that you're still waiting for either an approval or you're waiting for the documents. Next slide, please.
Sergio has a question. I'm going to stop sharing so you can queue up your website.
Oh, okay, go ahead.
Yeah. Hi, quick question regarding the second homes. So I own 2 homes, but one of the homes is my business because it's a rental unit. Can that still be applied?
Under the business side, yes.
Okay.
Yeah.
And
Okay.
also, I'm
Does it have to
sorry.
have an LLC and EIN already set up, or is it as an individual renting it?
You don't
It's
need that. Oops, sorry, you go.
Go ahead. Go ahead. Go ahead.
No, it's okay. You probably know it even better than me, so you go.
No, go ahead. Seriously. Let me just cue up my thing here, but go ahead.
Well, what I was going to say is if you have rental property, let's say you have 2 homes, and you don't have to have that rental property as an LLC, but what you need to do is show the rental income on your federal tax return. If you don't declare that income, then you cannot get a business loan for the rental house. But if you get a physical disaster loan to help you make the repairs, you can also apply for an EIDL to help you carry the house, to help you meet the expenses while you're making the repairs. Let's say you still have a mortgage and utilities and all that to keep the house, and you're missing the rental income. You can apply for an EIDL as well if you have a rental house. So the physical loan and the rental. You can also do that if you have an Airbnb or something like that.
Okay,
Yeah,
thank you. That
and
helps a lot. Thank you.
yeah, that's an excellent point. If you're showing passive income on your tax return, it is eligible as a small business entity. What you're seeing right now is our website, which is sba.gov. This is a quick way of getting to to apply for SBA disaster loans. Right up on top where it says Hurricane Helene and Milton, all you have to do is click on that light blue, or at least on my screen, it shows light blue highlight there, and you go down the middle of the page and it says apply for disaster loan assistance. Click on that rectangle, and it will come up to that the same slide that we showed you previously, where it says select location. And in this case, we're going to select Florida and select the county. I live in Hillsborough,